Good morning, traders and investors. It's Wednesday, July 9th. Taking a look at the charts. Let's start off with precious metals. We are seeing metals move a little bit lower again today. We've got gold down 0.5%, silver down 1/4. More or less, money is kind of flowing into the equities markets. We're seeing money flow out of gold, silver into equities. We've seen some short-term panic selling, which nobody really picked up on, and it's kind of convoluted or camouflaged in with the small caps in terms of for the stock market. But if we take a look at gold and silver, really they're still trading sideways in this range. Gold with a very large pattern here pointing to much higher pricing once it breaks out of that bull flag pattern. Silver has a bit smaller of a pattern in terms of time-wise. It hasn't been trading sideways as long, but overall it does have a bull flag pattern. Gold actually has a much larger potential upside. Silver has about 10% to pop based on this bull flag pattern, and gold has potential to rally like 25%. So as much as I thought gold was going to top out a long time ago, it still wants to continue to be in favor. We talked about how it's similar to the 2007 market top, and gold and silver could continue to actually push higher with more uncertainty hitting the markets and the trends at play. Now, let's take a look at the overall equities market here and just kind of give you a breakdown of the short-term analysis. So obviously on the left here, we have the 30-minute chart, just regular trading hours with our panic selling and our FOMO indicator. And of course, our overbought, oversold on the charts are telling us when the markets are ready for bargain hunters to step in and bounce, or when it's ready to get sold off in a market. And then of course, we have the daily chart here. And if we were to look at the daily chart, I mean, this is where the analysis that we have really breaks things down from a granular level. So actually, let's take one step further back. We look at the long-term chart here of the weekly chart of the S&P 500. Of course, as you probably know, if you follow me, we want to know if we're in a rising environment, if we're in a falling environment, and is the tide going up or down with the stock market. So we're in a new rising tide environment. We never know how long it's going to last, but we are back into an uptrend from a long-term standpoint. Now, if we drop down to the daily chart, we can see here we broke to new all-time highs. We have obviously shorts covering, which is creating some buying. We also have FOMO. Those who aren't long and missing out are now hitting the breaking points. They're piling in and they're helping drive the market up. So that was the quick first week of unwinding of shorts and FOMO reaching investors to get back in. And now it's putting in a little bull flag. Market is still primed and ready to continue to push and pop higher, but it's taking that little bit of a pause and a pullback I talked about a few days ago, saying just expect some type of pause or pullback because it's had a very strong, really from this low, it's had a very strong move to the upside. So the daily chart gives us a good feeling of kind of where we are. We're at all-time highs. We have a bull flag pattern. And then if we drop down to the 30-minute chart, now you'll notice the cursors move together. If you know what, when I hit record on the screen, the cursors don't follow each other. But more or less, this low over here in the market is this low over here as well, where the market drops down into this oversold market condition, telling us that, hey, we should see some type of bounce and rally from the 20-day moving average, which is this pink line, and this oversold condition. If we were to zoom out and go a little bit further, you can see we have another oversold market condition back over here. And of course, we had a big rally. And of course, that coincides with this bar right over here. So the daily chart gives us the overall view. We got the weekly chart for the tide. We got the daily chart for the trend. And then we have the short-term momentum of when things are oversold and they're ready for some type of bounce and move up. Now, if we were to kind of go back and look at this falling market environment, let's just scroll back, into that time frame. So if we scroll back, you can see here we have the market rolling over. If we put the cursor here, we went to orange bars, and then we went to red bars, which coincides with more or less the trend changing and changing direction, which we can see over here with the S&P 500. We had the trend change for our overall strategy as well. The timing was very similar there. And of course, the market goes into a downtrend. We have a first big leg down, and then you'll notice here the market got into an overbought market condition, and then it sold off. And it continued to sell off even more. And then, of course, if we zoom in, there was another condition right there. Of course, instead of lime green being oversold, we have these red areas saying it's overbought and the market should sell off. So that's what this 30-minute chart gives us, these levels. Tells us when trends are changing, momentum is changing, tells us when things are overbought and ready to sell off. It also tells us when things are oversold. It tells us when there's a trend change coming in place and things should be bouncing. And so that's what really gives us a good vibe on the market.